Hello, everybody. Tony here. US stock markets ripped higher on Friday after Fed Chair Powell's dovish pivot during his Jackson Hole speech, paving the way for a rate cut on September the 17th. Powell noted that the balance of risks has tilted towards labor market softness rather than sticky inflation, and this may warrant an adjustment in interest rates. This pivot puts intense focus on the September 5th payrolls report and the BLS labour market revisions due on September the 9th. In the meantime, NVIDIA's earnings report on Thursday morning, along with Friday night's core PCE inflation, are the main events on this week's menu. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where they are as we start this new week. Okay, so as we can see that after the sell-off which we saw at the early part of last week, the NASDAQ springboarded higher on Friday to once again be eyeing this weekly trend channel resistance coming in around 24,000. So those signs of rejection, or the sign of rejection we saw in the early part of the week, was somewhat negated. When we drill down and have a look at the daily chart, what we can see here is that the rally on Friday from Wednesday's low potentially has ended the wave 4 pullback we've been looking for, but it is short both in time and in price. Potentially in time, it takes a more reasonable or balanced look if we start to think about this being an irregular wave 4 correction. So potentially this was the wave 3 high, and we've seen the wave 4 pullback unfolding really since the beginning of August. Now, this starts to look a little bit messy in an Elliott wave sense, but it is possible that while the NASDAQ holds above this high on the 1st of August, this low on the 1st of August and this low back on the 20th of August, that we could see a retest of this 24,000 area. And a break above 24,000 would probably signal that a wave 5 move is underway, and that could target potentially 25,000. Now, if for whatever reason we fail again at this 24,000 resistance, keeping in mind that weekly chart which I just showed you, and then break below these two lows, then potentially it's a sign that the wave 4 pullback is deepening. But right here, right now, we are looking at a shallow pullback, which does look potentially like the wave 4 has finished, and that we're looking for a wave 5 higher if it breaks above 24,000. So really, in a nutshell, everything depends on how this 24,000 resistance level holds in the early part or the middle of this week. For the S&P 500, you can see again potentially this irregular wave 4 pullback. I don't like it. I'm not a fan of them, but we have to be open-minded when we're looking at these charts. And the fact that it has traded sideways for the better part of a month, potentially that is the wave 4 pullback we're looking for. But what we need to see now is the confirmation that this is the completion of a wave 4 pullback, is a break above this 64.81 high, potentially 6,500 to give it a little bit of room. And that would probably signal that a wave 5 up towards 6,600 is underway. Now, if again the S&P were to hold below this 64.80 to 6,500 resistance area and then start to break below these lows we've seen in August, you would say that potentially the wave 4 is extending down here. But we have to look at the facts as they unfold, the price action as it unfolds. And at this point of time, we're just not seeing the depth of that wave 4 pullback we'd like to see. But we can see that the price has been moving sideways for the better part of a month. And that's why we're open to this irregular ABC, which I've touched on. That's all for this week. Stay tuned for more updates.